Welcome to Recovery Report Live. I'm Dan Odess, president of GlobalPro, where we manage risk to recovery, and we've managed more than $1 billion in recovery. We've represented thousands of policyholders in the placement of insurance, and we make sure that you have information you can use by doing this broadcast every Thursday at 11 o'clock Eastern Standard Time. And if you haven't already, head on over to our YouTube channel, Facebook, and LinkedIn, and make sure you're following, and subscribing to all of our channels to ensure that you get the notification when we go live right here in the Griffin studio. Now, you might have noticed a little bit of different, a little decor around me. We're getting ready to launch the new Griffin studio with a whole new set of technology as well as different sets where we can give you information and different types of information from week to week, day to day. We're going to be pumping out a lot more content. I've been talking about it for a while. Some earlier broadcasts, I had hoped that we would have the studios ready to go earlier than I expected, but with all things, it takes time, and this is definitely a good thing. And as we are celebrating both Passover and Easter this coming weekends, we hope that you are taking time to reflect and spend time with your family and make sure that you're celebrating in the good spirit of Easter as well as Passover. Well, this has been a very busy week for the GlobalPro family. We've had so many events. We've been engaging property management companies. At the Latin Builders Association Expo, we've been engaging contractors and vendors and talking about all the things that are going on and the changes that are being made. In fact, I had a great opportunity to take the stage with mayors and commissioners to talk about the impacts of Surfside and what to expect from this session that's going on right now in Florida. But also over in Texas, Rob Bowlby, the president of the GlobalPro Texas office, was in the legislative sessions and just a few weeks ago talking about the impacts of some anti-consumer legislation that was being proposed there as well. There's this vibe or this move towards this anti-consumer sentiments of it. One of the things and one of the most compelling things that I believe that needs to be discussed or is an issue that I see in all of the lobbying efforts and the discussions is about what's in these products. There's a lot of focus on the service side of it, whether it's for public adjusters or contractors or mitigation companies, but there's a lot, and there's an obviously, I want to say this, certainly a huge conversation about the cost of insurance or the access to insurance in various different markets, particularly in Florida, but there's no conversation on what's actually in the products being sold. And I've made comments about the anti-business and un-American strategies to luring these insurance companies into these markets. Florida is the biggest condo market or community association market in the country. If it's such a massive opportunity for an insurance company, what more do they need than most of the anti-consumer legislation that has passed over the last year and a half? I mean, going back to last year, there was a special session set to discuss homeowners insurance, and out of it came this broad sweeping reform that included commercial lines and many other types of insurance policies. But one of the two biggest issues that they were trying to address in that session was assignment of benefits with contractors and insurance companies suing insurance companies. It really had nothing to do with one-way attorney's fees or public adjusters and these locusts and parasites, as the CFO state of Florida has stated after Hurricane Ian. It really had to do with an assignment of benefit issue and this allegation that contractors were taking advantage of it. Now, in speaking with my fellow contractors, particularly at the Latin Builders Association, about these reforms and why did they come about and what do I think the impact and what's the future of insurance, which was one of the seminars that we were putting on, we talked about it. And while, yes, I believe that litigation became a mainstay for mitigation contractors up until that reform in the legislation, it was kind of like a necessary evil when dealing with insurance companies and the alleged audits that they were doing. In fact, what we find is that insurance companies will randomly slash quantities and unit pricing and scope of work in a mitigation contractor simply to try to lowball or mitigate their cost or the payments for the work that's being done. So much so that these contractors just got quite frankly just fed up with it. And simply when they would submit their bills, they would expect the insurance company to slash them by over 50%, and they would just simply kick it over to their attorney. And while that may seem like a bad process or that, that's bad for the consumer and it dragged them into a lawsuit that they didn't want to be a part of, et cetera, as the story was told by those that were writing these bills, the reality of it is that there was no negotiation going on. The insurance companies weren't approaching these things in a way to try to mitigate those issues. In fact, so rather than doing that, they just went to the legislature to say, hey, we need to curb this, we need to shut it down. But again, I can tell you right now, I'm dealing with a multi-million-dollar commercial loss. And just yesterday, we finally got the insurance company's reports back. And as expected, they simply cut the unit pricing by more than $100,000 that is owed to this mitigation contractor. Now, the interesting thing is that this mitigation contractor stuck to the pricing that's made available in Xactimate, RS means, stuck to it, dollar for dollar, penny for penny, using the most up-to-date current cost database at that time to estimate the cost of their services. Now, this is a widely accepted and used software system. This is the software system that, quite frankly, most every insurance company in the property insurance industry uses to estimate the cost of it. So when we asked the insurance company, why did you cut the price? The reaction was to submit an RFI, a request for information, that's almost as long and extensive as the estimate submitted by the mitigation contractor. Now, it begs the question as to the question we asked the insurance company was, why did you cut the price by almost half or $100,000 on unit pricing when they used Xactimate and RS means? The reaction by the insurance companies is to submit a multi-page RFI asking tremendous amount. Now, they didn't need this RFI in order to pay the initial bill. And again, the only issue at that moment was this slashing of the unit pricing. So, and if they're using the widely accepted software system to estimate the value of their services, and it's the same system, by the way, that the insurance company was using to do their own estimate of the damages, why are they slashing the unit pricing? What is the basis and justification for? I mean, they demanded of you if you increase it, which during I'd say the last year or so when you had massive increases or increases in labor and materials, a lot of these estimating softwares just couldn't keep up with it. Things have somewhat normalized, I would say, particularly for mitigation contractors, which is mostly labor and very little material, typically, not always, but typically. And in this instance, that is the case. So why the cutting of it? And again, they didn't respond and provide us any sort of basis of it. But, you know, that begs the question, isn't that fraud? Isn't it just slashing it? Like you were intentionally underpaying something when your business practice is to use this estimating software to put these things together. Why is it that then you have a right to actually cut them unjustified, 50% cut to the unit pricing itself? Now, for those that suffer damages from Hurricane Ian, check closely at your estimate and your valuations. I can tell you that many insurance companies have done that. In fact, the Washington Post article that recently came out highlighted how there's been all this slashing of not only just pricing, but a scope, and it's totally unjustified. And the insurance company's adjusters have come out and blown the whistle on these issues. But I can tell you right now, if you do suffer losses, you're going to see this. And a lot of mitigation companies have the inclination to kind of acquiesce to these demands and this mitigation. But the reality of it is that if they do that so many times and over a long period of time, they're simply not going to be able to be a profitable company, right? They're not going to be able to operate because this is supposed to be the industry standard, a national cost database that is going out and looking at the costs of doing these, of supplying this material and labor in order to perform a certain scope of work. If the insurance company is simply just slashing prices 20, 30, 50% in this instance that I was talking about, and you do this over a period of time, I mean, and you are simply just accepting whatever they're willing to give you and moving on for the sense of just moving on, are you going to be able to provide the level of service, right? The level of service and materials in exchange for that lowball amount over a long period of time if you don't have margins in order to be able to hire the best people, to get the best materials, to provide consistent services that you need in order to be competitive in this market. Now, let's also understand that the insurance company largely relied on a Marshall Swift appraisal, okay, of the property values. Now, this is something I brought out at a recent seminar at the Latin Bill Association while I was sitting up there with commissioners and everything else. We were talking about what the issues are that are plaguing in the future of insurance and where it's headed. And we talk about how these appraisals have become under fire because of reserve studies and the need to reserve and the reforms that are going on there. And these appraisals are being used to set the values, and the property values are going up, and the cost of labors and material are going up. So these appraisals are going up. Meanwhile, what we've seen is this slashing, this cutting of what they're paying you, in this fight that's going on in the legislature about stripping you as a consumer of your access to courts and your access to representation. And more recently, we started actually seeing insurance companies try to use an anti-public adjuster form within their policies to try to obviate or try to strip the insured of their legal right to representation, public adjuster representation in the claims process. In fact, one insurance company recently told us that while they can't have public adjuster representation, they can have legal representation. Well, isn't that the very thing that insurance companies just lobbied against, is that they don't want lawyers involved? This insurance company is saying, well, we included the anti-public adjuster endorsement in our policy, saying that they can get representation, but they just need to hire a lawyer. Again, these things are not being done with good intention, and the legislator needs to wake up to it. And it's ridiculous, because what you think that you're passing laws for and to protect the consumer, it's not working. It's not doing it. It's not making insurance more affordable it's not attracting more insurers to the market. And it's not protecting the rights of consumers, despite the fact that these laws are supposed to protect the consumers and protect the public. I mean, that's the intent of passing laws, to protect the public. How are you protecting the public when you're passing laws that are protecting foreign entities, foreign companies that they're not American businesses? And if you actually see, the workforce in insurance is shrinking. They're not investing in technology the way that you think they are. They're not adopting the insuranceTech. I've mentioned this many of times, to help expedite the claims process. No, they're making the underwriting process more profitable. More profitable. We investigate where the money's going. Where are these premiums dollars going? Who owns the reinsurance companies? Who's setting the prices on the reinsurance? Who's paying for these lobbyists that are creating and writing these laws and doing these things? It's really fundamentally not making sense. And so when I took the stage at the Latin Bill Association Expo recently, and I talked about what's in the product, these are some of the things that they're not talking about. The fact that a surplus lines insurer is including a form that's anti-public adjuster, despite that you are a Florida corporation that bought an insurance policy from a foreign company, you have a legal right in the state of Florida to representation at the onset of a loss. And somehow they're allowed to use these items. Now, I've never seen an insurance company enforce it, and I don't think that we will, because I believe if it gets challenged, as I'm told by Florida Association of Public Insurance Adjusters and as well as some other officials, that it can't be enforced. But they are using it. So what's the solution here? When we're seeing this move towards anti-consumer, we're seeing this move towards increased costs, less coverage. Let's start talking about what's in the policies. That needs to be at the forefront. And that's my message today. As we head into this holiday weekend, and while we contemplate a new year ahead of us and what's to come for Q2, 3, and 4. Q1, it's been a struggle here in the United States. We've seen a lot of economic issues that are playing out on the big stage. Businesses are contemplating their next moves. We're seeing layoffs. We're seeing a retracted insurance market despite tremendous amount of anti-consumer legislation being passed in Florida that's allegedly going to attract more insurers here, but that's not the case. In fact, those that, again, as I mentioned before, wrote these laws, lobbied for these laws, came out thereafter and said, don't expect any sort of savings up front. We saw reforms that cut the insurance company's obligation to pay you if your roof gets damaged, despite a long-standing standard and in construction and engineering principle and standard that if 25% of your roof needs to be replaced, that you need to replace the entirety of it. The insurance companies want on an issue not to have to do that. There's real no rhyme or reason other than just We don't want to have to pay you more money for your claim. Just that's it. Not because you're not owed it, not because you didn't have the damages, just because we don't have to. Well, but then again, why do we have to buy insurance then? Is the banking industry looking close at these issues to see what's in the product? I don't think so. I haven't seen much conversation about that at all. In fact, I've reached out to some of our banking partners at GlobalPro, as well as various other companies I'm involved with, and talk to them about it. And they're totally clueless with regards to what's actually going on and how this may impact them. Let's wake up to this realization. Let's start talking about these things. And again, as I mentioned before, I invite many insurance people across the aisle, whether you're an insurance agent, you're a lobbyist, come on our show, talk about these issues. Bring the facts, though. Don't talk about 70% and percentages and all these other garbage statistics. Talk about dollars. Show me the dollars. And one of the things, the only time that I hear about dollars are the successful trials of attorneys protecting consumers, right? You hear about the attorney that gets awarded $1 million in fees for a case that's worth hundreds of thousands of dollars. Well, the reason for that is because the insurance company didn't do what they were supposed to do. It's not a bad thing. It's not a bad thing to get paid because you win and you prove that someone did something wrong. You shouldn't penalize the consumer for hiring a competent attorney that wins on their behalf and secures the benefits that they're owed under their policy. Let's not punish the consumer. Let's protect the consumer. Let's be reasonable, and let's pass reforms that make sense. But generally speaking, what has gone on as of today in the last year and a half with regards to insurance reform has largely been a consumer. Now, I can go back even further than that to talk about some other anti-consumer legislation, some of which was repealed and challenged at the Supreme Court and ruled unconstitutional and unraveled. I mean, that's how far insurance companies have gone over the years in trying to clamp down on consumer rights, their access to representation, and to the courts. And it needs to stop. We need to level the playing field. There's plenty of opportunity here in the state of Florida, as well as Texas and other coastal areas, for insurance companies to make money. They want the auto insurance and they want the other lines of insurance, but they don't want the property because they claim it's not profitable. But I honestly think that when you peel back the onion and you look at where the money's going and you look at what they're doing with it, it has more to do with their investments than it has to do with the products that they're selling in Florida and the way in which claims are made in the environment that we're in here. In Florida, I truly believe it. And I have yet to see any sort of concrete evidence to the contrary, despite some puffery regarding litigation and these issues. Most of the litigation that I've ever seen, including the litigation over AABs, is a direct reaction to bad faith claims handling practices by insurance companies. Be reasonable, and I think that you'll see all parties be reasonable. Ask for unreasonable legislation, and I think you're going to get the adverse. I mean, I know that there was a tremendous uptick in litigation filed on the eve of some of this legislation that was being proposed and thereafter passed. I think that you saw an acceleration of a couple of years worth of litigation occur within a few months because of this anti-consumer legislation. That's not helping anything. So while statistically we may see a fall off in litigation, I think if you actually normalize that over the last couple of years, you're going to see no change in it because you saw so much happen right around the time that the legislation happened to secure and protect consumer rights. That's why it was happening. Don't try to make the attorneys or the Florida bar into a bunch of evil attorneys or whatever else. That's not going to work because, again, I don't statistically think that it's supported by really any sort of evidence that will continue to carry the day for these insurance companies, lobbies, and especially interest groups that are clamping down on consumer rights, that are stopping you from having competent representation with the resources to ensure that you're getting everything that you're entitled to in that insurance policy. I mean, they write the contract. They have the opportunity to include things to limit and exclude. Let's change the conversation and start talking about what they're including. Let's move on from there. Again, I want to move on from this, talk about all the great things that are going on here at GlobalPro with our new studio and new vibes that are coming, all the new information that we have going on, all the amazing events that we have lined up for the rest of the year. If there's anything that we could do to help you, if you need information, your business is struggling, placing insurance, your association, not sure whether or not you got the right deal with your claim, let us know. We are rolling out technology as well. Our sister company, Griffin Data, has new products that are coming to market that are going to help consumers as well as the industry understand what's in your estimated damages and values. So tune in for more information about that and many other things that are coming. We're super excited about it. And we will see you right here next week, same time, same place on the from the Griffin studio. And again, if you haven't hit that subscribe button, like us, follow us on all our social media so you get that notification when we go live. So again, thank you so much for tuning in this week on Recovery Report Live. We'll see you same place, same time, right here on the Recovery Report Live.